All right. What you often wonder is who's doing the loans. So you see, interest rates up, interest rates this, interest rates that, but people are often thinking, what are the brokers seeing, and what are the brokers doing with loans? So we thought we'd bring on expert mortgage broker Mark Conway. Stay tuned. He's going to tell you what he's seeing in the mortgage market with people in the last few weeks. Stay tuned. Mortgage broking, mortgage broking, mortgage broking, mortgage broking.
Good morning, Master Novak. Thanks for having me on the show.
That's all right. Thanks for coming on. Mark. And Mark, you've been doing loans a long time, and you've got a lot of experience.
Some would say that. That's right.
How are you today?
Yeah, good. Happy Friday to you. And
thank you.
Another interesting week in the market. So
it just doesn't stop. It's never like that's how it is. It just keeps.
That's
turbulent.
Right. It's turbulent. Every week there's more news coming out, different bank policies, people passing, people failing. There's so much to navigate these days. So thanks very much for having me on this morning, and I'll pass a couple of tidbits on to you this morning as well that we can all share with the viewers. So one of the main things that I wanted to talk about today was tax returns for self-employed people. 21 tax year was COVID, which means if you can do your 23s, which is just finished, the bank will use the 22s and the 23s, which increases your borrowing power substantially. And we're finding well over 90% of people are instructing their accountants to draw up drafts that we can at least use for figure work, especially when being serviced at not far off 10% now. So some of the loans that are sitting at high sixes, especially for an investment interest only loan, you're being serviced at over 9%, which is really, really challenging to not only refinance, but to even buy another property as well. So what we are finding at the moment is there's a bit of a queue with the accountants at the moment. Some people are taking 3 and 4 weeks to even get an appointment at the moment. But that's probably one of the biggest changes that we've seen in the last couple of weeks is the rolling over of the tax year.
And that's probably good. That's good news then, I guess, because people are more pumped up. 21 was that would have been the COVID wash up tax return, and this is the recovery on back to normal tax return that people are getting. Right. So they want to show it to people out there. Mark, without revealing your customers, what are the types of cats that are going out there and getting loans? And sorry, first question. What's the proportion of refinance you're doing compared to I want to buy a place?
I think the refinancing percentage is about 80% at the moment. One of the highest we've ever seen. The purchasing has slowed down a lot, but the refinancing is through the roof, especially as every few months another batch of customers comes off their fixed rate loans as well. And we've also noticed some aggressive repricing from banks lately, which we haven't seen for a while on the customer retention space as well. So what we do as a broker is we reprice the loans, especially when they come off the fixed rate. When you walk into your bank, they don't do that for you. They just hit you with whatever rate they feel like at that particular time. So lately we've been able to negotiate some really big customer discounts, getting the same rates for new business for the existing customers, which is also quite rare at the moment. And there's a couple of major banks that are really playing ball in that space as well.
Do the outgoing banks fight for the business? So when you do the loan and the client says, please proceed, and then you write to the outgoing bank saying the client's going to leave you, do you find the banks coming back and saying, hang on a sec, I'll do better now?
So historically, that used to happen quite a lot, but we found
Yeah,
lately in the last even 1 or 2 and 3 years that's declined quite a lot, where the retention space is not as strong as what it used to be, and the banks are
yeah,
spitting out their best and final offer, which is much worse than what someone's going to get if they refinanced. So you need to save a good 15 basis points on your loan to make a refinance worthwhile, depending on the loan size. But we are finding
yep.
some of the retention teams are just not as aggressive as they used to be.
Wawa, wee wawa. And we're going over to the type of person that's getting. I'm going to ask you two questions here. The 80% people, what do they look like? And the 20% people, the loans that you're doing that are buying something, what do they look like? Let's do the smaller of the two. The people that are out there that are buying, that you're doing loans for successfully, even unsuccessfully, that what do they look like? What types of, why are they out there buying? Are they buying investments, owner occupiers, bigger, smaller? Tell me about them.
Yeah, great question. So got quite a few people that have saved a couple of $100,000 but have never bought a property, and those people are okay of paying 5 or 6%, and they've just decided to get into the market. And often they're either using buyers agents to get what they want, but they're also buying it as an investment because they're not 100% sure if they're going to actually move into that property or not. But what they are doing is trying to draw down on some of their savings just to at least get a foothold into the market. And we're seeing a couple of first home buyers taking advantage of the new stamp duty rules, which increased from $650 to $800 for a first home buyer. So it's opened up the market a little bit on the purchase price there. So they're able to buy an older style 2-bedder, where traditionally it was more like a 1-bedder at $650.
Yep.
So we're seeing a little bit of movement in that smaller style space there at the moment as well.
Okay. The guys that are not getting the loans, what do they look like? What do the naughty ones look like?
So the people that are not getting loans have either structured their debt incorrectly to start with, where some properties just don't have enough good debt on there, so investment debt,
Yep.
or they borrowed right to the max, and there's just no way at 8 or 9% from servicing they could ever borrow money again. These people are in mortgage prison quite badly at the moment, and we've got several different customers who are stuck for a good 12 to 18 months coming up, and we've just tried to negotiate the best rate we could with their existing lender for them at the moment as well. But we've also stuck them on a bit of a plan to say, like, what's your bonus income coming up looking like? Let's talk about your outgoings, because a couple of the banks have reduced their servicing. So some of those lenders are the only people that these people can actually refinance to as well. So there's a really broad market at the moment, depending on what kind of income or structure someone has as to what they can actually get approved. So we used to be sport for choice, and it feels a little bit the opposite at the moment, where you can't give someone 4 or 5 banks as a comparison because they can literally go to 1, maybe even 2 different lenders.
Got it. I'm also enjoying watching you put yourself through torture because you've decided to hold the phone up with one hand, and now it's at the 8-minute mark. You are trembling.
Yes, thank you very much. Thank you.
Feel free to swap hands if you like.
I have actually swapped hands after that. After that comment, I was like, "Yep, the left hand's not as good as the right as well."
The struggle's real.
So good.
All right, so it is. So we've talked about who's buying, the 20%. We've talked about the people that are refinancing. We've talked about mortgage prison. What do you see coming up in the next couple of months, next couple of quarters, the struggles that people can sort of address? I think one of them, I think you said, was tax return, but
yes.
What are the struggles that are approaching for you as a mortgage broker, and how can the consumers help?
I think that there's going to be a couple more policy changes coming up to make it a little bit more easy for people to refinance, whether they've got slightly better loan terms, and I think more banks will start to match their current structure with what the new bank can offer. So I'm expecting a little bit more movement in the market coming up, where a bit less focus on serviceability and a little bit more focus on the current structure, where if you've got a really good credit score and you've never missed a repayment for 12 months, and you're not borrowing any extra money, then the new bank will take on your current debt and they'll make that process a little bit easier. So I think we're going to be looking for a little bit more of a streamlined approach to helping people move banks. So I think some of the banks will be bringing out a little bit more aggressive policies in that department as well. So I don't expect people to be hog-tied to their current bank forever. So we're thinking in the next 6 to 12 months, we're going to see a bit more additional movement there as well.
A bit of love from the banks.
Yeah.
Do you reckon there could be some love from the government? As in, and I guess that can come in a couple of different forms. One, they adjust rates downward because they may have overshot it. Or two, they change their assessment policies on what's required to impose onto the banks.
Well, that's right. So will APRA change the servicing benchmark from 3% downwards? That could be a possibility coming up. And will we see any rate cuts coming in the next X amount of months? And will that affect servicing? Rate cuts will have a big effect, because every 25 basis points could be $50,000 or $100,000 in borrowing power on your loan, depending on which bank's looking at your transaction. So does it feel like we've hit the top of the rate cycle? Fingers crossed. And what are the movements looking like in the future? That's a tough question to ask, but there could be a couple of levers coming up which will help.
Do you think the Reserve Bank has overshot the rates going up or to control inflation, or do you think from the outside they've got it bang on, not enough? What's your opinion on that?
My opinion is that they probably got a bit too aggressive. It was a global issue, so they were sort of jumping on the same bandwagon as some of the other major countries as well. Did they fix the inflation problem? I don't think so. I think there was a lot of external factors that played a big part in that, and the cost of funds is not necessarily the main driver in my particular opinion. So it's a tough one to really answer. What will we see in the coming future? That might depend on what our new Reserve Bank governor looks like and what her opinion is on, where should the cash rate sit. So, will long-term cost of funds for a borrower be 3 or 4%? That's what we can sort of hope for. Will we ever see a 2% interest rate again? Highly unlikely.
Great question.
Yeah.
I agree.
Yeah. So,
Mr. Conway, I've got to thank you for your time this morning. You've been really, really helpful. You know what, mate? It's just what's going on in everyone's minds at the moment, and
right.
You've surfaced it, you've discussed it. It's what hundreds of customers that you speak with talk with you about intimately, and we can bring it up today because it's got to be going on thousands and thousands and thousands of people's mind. So that's cool.
Lovely. Thanks for having me on the show.
Thank you. Have a great day, everyone. And Lisa Novak's not well today. Good luck, Lise.
Good luck, Lise.
Got a cold.
All right.
Bad cold. Bad.
Bad cold.
Thanks for helping us last minute, Mr. Conway, as well.
Not a problem.
See ya. Take care.